If you're a trader on a floor like these guys, or it's just you with a terminal, a key component of success will be dependent on your temperament and your personality.
There is a danger that we get very wrapped up in markets through our own personality. I would go so far as to say if you're an excitable personality, you're probably attracted by markets, and actually that attraction might be part of your downfall.
So what can we learn about our personalities and our attitudes to risk and decision making? We're all, of course, prone to various biases. Here are three to be aware of. The first, Gerald terms, is anchoring.
This is really susceptibility. If I plant a seed in your mind, that can be very strong and in the front of your mind. So, you know, the classic one, if I say don't think of an elephant, the first thing you think of is an elephant. And I think when we look at financial markets, we're often very attracted to one dominant fact or dominant story, which might be a market shorthand, but might actually be masking what's really going on. So I think we have to be careful of that.
Of course, we all have aversion to losses, but get real.
Nobody wants to be seen to be taking a loss, and I think there is a tendency to hang on and hope things will get better. And this is a slippery slope to disaster if one's not careful. It's also a very good sign of how disciplined your trading strategies are. If you haven't got a disciplined plan, you're much more likely to sort of hang on and hope things will get better. And you may suffer from this illusion of control, this feeling that you know what's going on and the market doesn't. That's incredibly dangerous.
As for the real wealth destroyer, do you recognise what Gerald calls the sunk cost bias?
This is when we put so much money into something we can't afford to give up on it. Curiously, we see a lot of this outside financial markets. We can all think of government projects where huge amounts of money has been spent, but nobody really wants to take the decision to stop the project because it's not working. Very similarly in financial markets, you take a position, you find it starting to run into loss. Instead of admitting you're wrong, cutting it and getting out, you hang on and sometimes even more dangerously, you pour money into it. You have a lot mentally invested in that investment or project, and so you don't want to give up on it. It can be very hard to cut a losing position.
So, Gerald's top trading tip?
I think awareness is the most important one. None of us are masters of the universe. We all would like to be. Try and have a very disciplined plan. Something curious seems to go on in the brain that if you actually write a plan down, and I mean write rather than even type it out, it seems to gain some sort of strong credence in the mind. So make certain that you've got a strong trading strategy written down, keep a daily journal and record your triumphs and your disasters. Always easy to record the successes, tougher to examine yourself when you've got losses, but it's a critical thing to do.